Now, over the years across the dividend or income focused community, there seems to be several different stocks and or ETFs that gain some popularity, and while some of them go away, other ones have stuck around for the long run, and investors are still overly hyped up about them to this day. Now, some of these names being the super popular ones like SCHD, of course, names like jepi that's become very popular over the last year or so, or even names like jepi. You also can't forget about realty income for the dividend focused community. Most investors are absolutely crazy about realty income, including myself. But in this video, to change things up a little bit, I'm going to be going through 3 different ETFs that I absolutely adore, but don't really hear a lot of investors talking about these ones as much as they maybe should be. Every single one of these ETFs offers something that you don't really see across the landscape of investing. And like I said, even though these ETFs do offer exactly what a lot of you guys are probably looking for, they just haven't really got as much shine as some of the other popular names. So if you want to go through the 3 ETFs with me that I don't think are as popular as maybe they potentially should be, well, then make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, the first ETF that is not as popular as I think it should be, I've said this before and I'll say it again, is the DIVO ETF, the Amplify CWP Enhanced Dividend Income ETF. Now, this ETF is perfect to include in this video because just as of recently, I was talking to a newer investor and they literally asked me, why do you invest into DIVO? So I sort of broke it down for them, but that's exactly what I'm talking about. A lot of investors are sleeping on some of the names that might be offering exactly what they're looking for. Now, it says right here on the Amplify ETF's website, why invest in DIVO? Income potential, comprised of high quality dividend-oriented stocks along with covered calls and individual stocks. DIVO, as of right now, holds around 26 different individual stocks, names like Caterpillar, names like Visa, Goldman Sachs, JP Morgan, Microsoft, super high quality blue chip names that a lot of us, for the most part, probably would not mind having more exposure to. But then along with it, as you can see down here, DIVO does sell covered calls and individual names within the portfolio, which makes DIVO an ETF that doesn't yield, say, 1 to 2 to 3% because the underlying, but now DIVO can offer around 5% distribution rate. Now, there's of course tons of covered call ETFs in the market these days. Some of them buy into a single stock, some of them buy into an index. But the thing I like about DIVO is it gives you exposure to some of the best dividend-oriented stocks that also have a ton of growth potential, but then with that covered call overlay, utilizes the implied volatility and offers a ton of income generation for investors. Now, for DIVO, it next says active management, allows the portfolio manager or the CWP to identify opportunities and risks and act on those decisions in real time. Now, lastly, it says seeks to lower volatility. This is one of the main reasons I have loved having DIVO in my portfolio over the past several years. I probably bought my first share of DIVOs back in 2020. Now, I say this because during the last 5 or so years, there's been a ton of different market cycles. We've had times where the market's been up a ton, down a ton, but DIVO as a staple in my portfolio has always remained pretty chill. It says dividend and option income may provide lower share price volatility versus the overall market during times of broad-based market declines. Now, DIVO is not necessarily going to be the fastest growing ETF in the market by any means, but it's also not going to decline as fast as a lot of other ETFs in the market, which gives this ETF a nice steady low beta, which, like I said, I personally love. Now, I mentioned that DIVO offers almost a 5% distribution rate, which is much higher than you're going to get when you're talking about ETFs that are exposed to some of the top names like DIVO is. Now, along with that, DIVO pays distributions on a monthly basis, anywhere from say 14 to 15 to 16 or 17 cents per share per month. Now, looking at DIVO's performance since this ETF started trading back in 2016, it's offered around a 12-13% return year after year, which again isn't necessarily the highest you're going to see across the market, but it is a nice steady return. This ETF is low beta, it offers around a 5% starting yield, and at least in my opinion is probably perfect for some of your guys' portfolios. The next ETF that's relatively new, but I don't see that many income or dividend focused investors getting too excited about as of yet, which I do not understand why, is the NEOS Real Estate High Income ETF. Now again, this ETF just started trading about a month or 2 ago, but this ETF strategy offers exactly what I've been doing in my portfolio for a while now, and that's buying into high quality real estate investment trusts, but then utilizing a call option strategy to basically suck out more money out of these REITs. Now this ETF so far offers around a 12% distribution rate, which is much higher than you're going to get, especially when you're buying into high quality real estate, because a lot of those names don't necessarily offer the largest starting yield. Now it says right here, targeted benefits of this ETF strategy. The fund seeks to distribute high levels of monthly income through a data-driven call option strategy on ETFs that seek to track the Dow Jones US Real Estate Capped Index. It's actively managed by NEOS, so this fund is actively managed, which is why it's going to cost you a little bit. But the fund seeks to offer upside potential in addition to primary objective of high monthly income. So this ETF can grow over time, but the main focus is going to be to distribute a high amount of monthly income. Now this fund may offer efficient exposure to a portfolio of US listed REITs with an enhanced layer of high monthly income potential packaged into a single ETF. Now I personally have been buying into shares of Realty Income for almost the last decade or so and selling covered calls on my individual shares. That's offered me a ton of income potential while also receiving the 6% yield that Realty Income has offered me over the last several years. Now I love the idea of buying into real estate investment trusts because they potentially offer more cash flow than a lot of other dividend focused investments, but then with the layer of a covered call, it's offering even more potential income, which is amazing. Now again, this ETF is brand new, so take this with a grain of salt, but we're talking 50 cents per share per month, at least as of so far. Not to mention, if you go into the 19A-1, you can see that it is anticipated that this ETF will be offering 100% return of capital for the dividends that have been paid so far. So even though I can't speak for every dividend income focused investor out there, I personally love cash flow. I love consistent cash flow. I also like exposure to high quality real estate, names like American Tower, names like Realty Income, Simon Property Group, Public Storage. I mean, these are blue chip names. But along with that, a 12% distribution rate just about, that's tax efficient, sign me up. The last ETF that I don't really see that many investors talking about as of yet, but I definitely have been buying some shares during this most recent dip and will continue to do so, is QDVO, the Amplify CWP Growth and Income ETF. Now this ETF is from the same provider as DIVO, Amplify ETFs, but offers a little bit more growth potentially than DIVO. It says, why invest into QDVO? Growth and high income potential, seeking capital appreciation from growth-oriented stocks with high monthly income from option premiums and dividends. It then says equity exposure with lower volatility, covered calls and dividends may help reduce the volatility versus the overall market, just like DIVO. Now the names in QDVO are going to be much more growth oriented. We have names like Nvidia making up the majority, names like Apple, Microsoft, Amazon, etc., etc. But then if you scroll all the way to the bottom, what do you know? Tons of different individual covered calls, which are going to generate a ton of income potential. Now how much income, you're probably wondering. We're talking 9% distribution rate for QDVO, which is about double that of DIVO. Now because the market's been pretty sloppy as of recently, QDVO is at a discount in my opinion as of right now. So I've been grabbing some more shares here and there, trying to get more exposure to some of these names through this strategy. All to say that I do think that a lot of dividend investors don't really know about this one. I think a lot of investors wouldn't mind having more exposure to some of these growth-oriented names with the cover call strategy that this ETF offers. I like this ETF because it's sort of a curated group of stocks, and with active management, at least so far, looking at DIVO, they've done pretty well. So there we have it, guys. Those are 3 different ETFs that I personally have been buying like crazy as of recent and that I think are somewhat underrated when it comes to most dividend investors. Now again, every dividend investor is going to want something different than the next, so maybe you don't want to have exposure to real estate, or maybe some investors want even more exposure to real estate, or maybe you don't like the fact that DIVO or QDVO just buys into a small amount of holdings, or whatever the case might be. But regardless, I want to share with you guys 3 different ETFs that I find interesting and that I think a lot of investors are sleeping on. Now, before you guys go, I do have one last question for you to comment down below. What are some ETFs that you think most investors are absolutely sleeping on that I should look into next? Drop some ticker symbols in my comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.